All right, now that we've kind of talked about the extra benefits of studying up hard on this lesson, I mean, this lesson, yeah, definitely important, and it's just me giving you extra motivation to do it because why not? What are our filing status options? These are the options you can choose if you are filing a tax return. You can choose single. This means you're unmarried or legally separated at year end. The big kicker for all of these is at year end. So whatever you are at year end, if you get married, we'll see some questions where it's saying you got married at 11:59 New Year's Eve. Now, I mean, if the paperwork's filed properly and you're considered married, then yeah, you are married if it was only for 1 minute of the year. Now, even if you are married, doesn't mean you have to file married filing jointly. We'll see all of that. So if a spouse dies, there are no dependents, you must file as single for the years following the spouse's death. These are all things you should memorize, and not only will you memorize them, but you'll see them throughout many questions, which will obviously help you to reinforce them. But this slide is going to be critically important. Next up, you have joint returns. So this is married filing jointly. Married people, those living together in a recognized common law marriage. Now, I'm not the most adept expert at what common law marriage looks like in terms of, if you're considered married because you've just lived together for so long, but you don't need to know that for the exam. It'll tell you these two people are recognized as married under common law, or married living apart. You're not legally separated or divorced. If someone had to move for a job, unfortunately, that's something that, maybe some of you will experience. You get married and your spouse is living in another state because of work, money, all that stuff. It's not fun. Can't imagine being married and doing all the distance. I mean, hey, my parents did it and they made it through. So, but that's something you'd see. You could still file a joint return. Doesn't mean you have to be in the same house physically. You could not see each other for a year. I mean, think about military, you're deployed, you could still file married filing jointly. Now, if you're divorced during the year, there is no joint return because at the end of the year, you'll be divorced. So you cannot file a joint return then. And if one spouse died during the year, you still may file a joint return. And why is that? It's because, there'll be a few things throughout this exam where it's like the IRS is kind of having a heart. And what do I mean by that? Well, if your spouse died, that's obviously going to be completely traumatizing and tragic for you. So the last thing the IRS wants to do is pull the benefits you get from married filing jointly. We'll see that there are a lot of benefits for that. I mean, the most simple one being you get a double standard deduction, which that's going to be pretty big. It's a good chunk of money that you get as an extra deduction. So it's kind of like when we have workers' compensation. If your leg gets crushed and you get workers' comp, well, you're not taxed on that. The IRS saying like, hey, I know you're probably dealing with some significant issues. Last thing we want you to worry about is paying taxes on that workers' compensation. Also, if companies, this is something we'll see later in the exam as well, if a company's CEO has a life insurance policy taken out on them and that CEO dies, that money is not going to be taxed as long as the company receives it. And why is that? Well, because if the CEO of a company dies, the company's probably got bigger issues to deal with than paying taxes on that money. So it's kind of the IRS throwing you a bone saying, hey, I know you're dealing with significant issues, so don't worry about it. So that's one exception to this rule is if your spouse died during the year, you can still file a married filing jointly. Married filing separately, this is just another option. If you're married, you can choose. This doesn't mean you're unhappy in a marriage. It doesn't mean anything like that. There are many reasons why you'd file married filing separately. I mean, there's more for filing jointly, but we will see. I've got a slide here. It talks about a few reasons you would possibly consider married filing separately, but that's just another option. There'll be many questions. What is the most advantageous tax status of those that are listed? What is the most advantageous of those that are listed that you can choose in your personal situation? So those are just kind of some questions you want to keep in your mind as we go through this lesson. Next up, we have the status of qualifying widower with dependent children. Now, this is a tax status that you can use for 2 years after the spouse's death, unless you remarry, in which case you can go back to married filing jointly. This allows the individual to receive the joint tax deduction. Again, why is this there? It's kind of because the IRS is saying you just went through a lot. You can use this for 2 years after the spouse's death. It gives you a lot of the same tax benefits as married filing jointly. Now, what do you need to do this? You have to have a principal residence or a dependent child. This means that you have to pay over half the cost of maintaining the household where the child lives for the whole year. And it must be a child, stepchild, or adopted child of the surviving spouse. Foster children do not qualify. Why do they discriminate here? I didn't write the rules. If I had to guess, it's probably because they don't want you just adopting a kid just for the tax benefits. But hey, that's foster children. If you run a foster home, there's probably different tax rules with that. But that is not something we have to worry about for the exam. Lastly here, the head of household status. This is for someone who is unmarried, someone who's legally separated, or married and has lived apart from their spouse for the last 6 months of the year. Not qualifying widower, not non-resident alien. We'll talk about what that means as well. This person maintains the household that is the principal residence of qualifying person for more than half of the year. So this is going to be someone who basically running the show, single parent. They've got a qualifying person. Now, notice we said person. That could be a dependent. We'll talk about with qualifying children versus qualifying relatives. If it is your parent, right? Maybe your mom or dad is elderly and lives with you. You can still do the head of household. It doesn't have to be a child here. So we see just memorize these. Make sure you're familiar with the different status and within each of them, what are the requirements? And obviously, like I said, we've got a lot of reinforcement here. Lots of examples, lots of opportunity to practice this. Now, what is a non-resident alien? This is something, as I mentioned here, we're going to see this concept in later lessons, but it's important now as we see non-resident aliens mentioned per the IRS in various filing statuses. A lot of words here. There's a lot going on. Now, a non-resident alien, according to the IRS, is an individual who is not a U.S. citizen and does not pass the substantial presence test for the tax year. In other words, these people are foreign nationals, meaning they are a citizen of another country, who have not met the criteria for being considered a resident alien. So we've got non-resident alien, but we've also got resident alien, meaning this is a person who's a resident of the United States, but they still are not a citizen. The substantial presence test, this is used to determine an individual's tax residency status. So that's different. We see here, you could be a non-resident alien or a resident alien. You can live here. I'm not like an immigration expert, but you can live here, you can work, there'd be reasons you could be here, but you're still not a citizen. That's just how the law works. So, but for tax purposes, how do you determine if someone is a resident? Well, you have the substantial presence test, and that determines your residency status for tax purposes. To meet the substantial presence test, an individual must be physically present in the United States for at least, and how would you prove this? Well, you just prove that you live there, you show receipts, you show that you were living there, you show you didn't have any flights out of the country, anything like that. Not that you have to know that, but it's just kind of information for the real world. So you have to be physically present for at least 31 days in the current tax year. So that's not bad, 31 days out of one whole year. Or 183 days during the 3-year period that includes the current tax year and the 2 years immediately before that, counting all the days present in the current tax year, third of the days present in the first year before the current tax year, and 1/6 of the days present in the second year before the current tax year. This is aggressive. It's a lot. You don't really need to know this. Generally, for things like this on the exam, if there's a question kind of about it, it's going to say, oh, this person lived in the United States for 11 months. That's pretty drastic as compared to, or if they said they were only in the country for 5 days. They're going to be pretty black and white about it. They're going to be quite distinct. It's not going to be, oh, they were here for 32 days. And you have to remember, oh, was it 31 days or was it 33 days? They're not going to, drive you crazy with that, especially with this over here. Just this is to know, especially as you go through your first run through of all the lessons, questions, get a good general idea of things. Get a general idea of where the thresholds stand. Maybe, obviously if you can memorize thresholds, if you can memorize amounts and rules, do that. But if the worst that happens is on your first run through of all the lessons in the material, is you get a general idea of things like, right, 1 month during the current tax year. If you kind of get an idea, okay, I know it's obviously a little bit of time as compared to, a good chunk of time during the year, that is a good strategy as well. Here are some examples of people with their proper filing status. Like I said, have it all memorized. This is your bread and butter. You should definitely know this for the exam. Here's an example of someone singled. They are unmarried or legally separated at year end. Jane's not married and has no dependents, and as such, she files single. A lot of these people, myself included, you graduate, college. Once you leave college, you get a job, so you can start filing, pretty hefty tax returns as compared to when you were, in college. And yeah, most of you are going to be filing single unless you're married in college. I'm not judging, I'm just saying statistically speaking. Most of you, I'm just trying to paint a picture of what it looks like. Now, number 2, if the spouse dies and there are no dependents, you must file as single for the years following the spouse's death. Now, Jack's spouse passed away in year 1, and they had no dependents, so Jack has to start filing as single. Now, we saw the qualified widower with dependent. That's different. If your spouse dies and you have a dependent, you still get those benefits. But if you're single, you don't have any dependents, you don't have any children, you don't have anyone qualified. We'll talk about what a dependent is, the rules, and who qualifies as a dependent. We'll talk about that. But you've got no one legally, tax-wise, who's dependent. You have to start filing as single in the next year. So you can file as qualified married in that year, but after that, you got to start doing single. Now, in this case, we've got joint returns, married, living together in recognized common law marriage. Again, it's basically just if you're living together for a long enough time, even if you're not legally married, the tax code could consider you married. We don't need to know about the rules for that, but the question would just say, these people are recognized as married under common law. or married living apart, not legally separated or divorced. Example here, Emily and Daniel, they're married, live together, they file a joint tax return. Pretty standard, nothing wild. Next up, if you're divorced during the year, you cannot file a joint return because at the end of the year, you will not be married. Laura and Mike divorced in June, year 3, they cannot file a joint tax return for year 3. Lastly here, if one spouse died during the year, you can file that joint return. Throughout the entire exam, like I said, I will be painting pictures in your mind of what are the tax rules, what are the reasonings for this. This is one of those examples of the IRS saying, hey, I know you're going through a lot. I'm going to give you the benefit of this tax advantage. For this example, Sarah's spouse died in October year 3. Sarah can still file a joint return, which is much more advantageous than single for year 3. We got more examples. Like I said, we got examples. Oh, do we have a bunch? And that's the point. I want you to see as many of these as possible. I'm going to teach you through examples and test yourself, practice. All these are going to help. Now, here we have married filing separately. These can file separate returns if they are married. Max and Chloe are married but choose to file separate returns. They each file as married, filing separately. Again, we'll see the advantages of that later. We've got the qualifying widower with dependent child. This, I want you to memorize that you can use this for 2 years after the spouse's death, unless the taxpayer remarries, in which case you're going to go back to married filing jointly. This allows to receive the joint tax deduction, the joint standard deduction. This must be a person who provides a principal residence for a dependent child. You must pay over half the cost of maintaining the household where the child lives for the whole year. It must be a child, stepchild, or adopted child. Like I said, foster children do not qualify. And lastly, here an example, Natalie's spouse died in year 1, and she has a dependent child. She can file as qualifying widower with a dependent child for tax years 2 and 3. Lastly, here we've got this head of household, and we've got the rules again here for the head of household. Let's dive right into the example. Well, Kevin is divorced, has a dependent child, and maintains the household where the child lives for more than half of the year. Kevin can file as the head of household. Again, the difference here being it can be a qualifying person, so a qualifying relative. This could have been Kevin's mother, who he provides more than half support for. That is totally okay as well. But this has to be dependent child up here. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.